RBI, pull up the mid-cap, small-cap indices as well, and you will see that a good amount of outperformance coming in, almost a percent gains coming in on the mid-cap, small-cap index is also 1.5% higher. Talk of correction, and look at the way small-caps are actually rallying in trade. Uh, let's take the discussion on markets forward with Bhavin Shah, who's joining us from Sameeksha Capital. Bhavin has just come back from an overseas trip. Bhavin, good to see you back in Ahmedabad. Talk to us about how was your trip. I believe you were traveling in US. Did you manage to meet some founders, some or some investor community, or it was a leisure trip alone?
Well, primarily it was leisure trip, but yeah, I did interact with few people, sort of having interest in markets and so on.
What is the external view on India coming right now?
I think it's very positive. I think we just have recently, I think only last week the Gazette came out on finally notifying the NRI, removal of NRI limits into a fund in IFSC GIFT City. I believe that there is a huge potential for a lot of NRI money to come into Indian equities via GIFT City because for the first time a very viable option has opened up. And I think what it is right now is a lot of NRIs are going to their advisors and asking them for choices to invest in India, and they end up doing it through some of the US based funds or some of the ETFs, which really don't give them an opportunity to participate in a lot of stocks that actively managed funds in India invest in, whether it's PMSs or AIFs, and some of the small cap funds. And so I think basically I see a gap, there is a set of investors living abroad who want to invest in India and participate in India's growth story, but they haven't had these choices till now. So I think there is definitely now the channel has been framed. It's a matter of now reaching out to those people, and maybe some kind of a more organized effort from IFSC and other authorities could be done to promote India to a large set of the whole Indian diaspora.
Valid point you raised, Bhavin. Let's scratch a little more. When I travel overseas, one finds that the Indian diaspora across sectors, be it entrepreneurs there, or be it at very influential positions in various companies, are generating phenomenal cash flows, much more than what they can consume. But unfortunately, all they have played India in the last 20-30 years, premium real estate, which may have given them a Camellia or a World One, may have given them boasting rights, but it doesn't really generate any returns. And when they see, cousins back home talk about doubling portfolio every 3 years, there's a major FOMO in them.
Right.
Up till now, the FATCA issues, similar issues were holding them back. Any broad thoughts that if the next 6 to 8 months, this becomes, clearer that we can channelize overseas Indians' money into India, how meaningful? I mean, we are already at 20,000 crore plus because of domestic fund. It will lead to FIIs becoming even more insignificant into the overall scheme of things, isn't it?
Absolutely. I think as you said, when they think of India, they have been historically thought of real estate, and inevitably they have, struggled with those investments, both in terms of the quality of investments and also in terms of entry and exit difficulties. And now, they have this option whereby they come in as a dollar investor, go back as a dollar investor. They don't have to deal with the local Indian tax compliance. If many of them don't even have a local PAN card and so on and so forth, and they are not required to have any of that. So it is a great setup that the Indian government has now provided the NRIs, and as I said, now it's a matter of the various fund houses and maybe the authorities also really promoting this aggressively. We have seen this mutual fund Sahi Hai campaign in India really promote the mutual fund, take it to masses, tier 3 and tier 4 towns and so on and so forth. I think we need something similar to that, to reach out to the Indian diaspora abroad.
Let's talk about your portfolio construction right now, Bhavin. what exactly are the areas you are most bullish on and have reflected in your portfolios? If you could just broadly tell us.
So we continue to be very bullish on financials. I think that remains an area where we have the maximum number of stocks, and I think overall weight also would be pretty meaningful. I'm not sure if it's going to be higher than the index per se, but we play financials in different ways. We are not really trying to match sort of weights to weight, weight of a particular segment within financial to that in the index and invest, but rather look for opportunities. So we like we have investments in large private sector banks, some regional private sector banks, NBFCs, MFI, microfinance, and wealth management, life insurance. So pretty much across the board, we continue to find a large number of stocks there still reasonably valued, and I think a great way to participate in India's growth story. We also are clearly overweight on aviation. We continue to like the way the space is forming, with respect to, Alliance share going to one company, and I think other airlines continue to deal with various issues, whether it's labor or whether it's the aircraft availability or whether it's just the transition from publicly owned airline to a privately owned airline. So I think that continues to be another area where we are very overweight.
I mean, what are your thoughts on IT? Especially, I mean, IT is bustling last 1 week, expecting good numbers. But I want to talk about 5 to 7 year view. Which end of the IT? There is the Coforge and persistent variety, and then there is the large cap variety. I mean, you understand it so well. Where do you see the maximum scope of money, generating good returns over the next 5 year period?
I definitely think it's going to be the small and mid cap IT because they can still deliver higher growth rates. I think large companies, they're great businesses, but I think growth rates are going to be a challenge for them going forward. I mean, I think we have sort of had that big jump in growth during the COVID. I think that phase is over. I think now we're back to much lower growth rates, and I think that is not going to be exciting in terms of a returns perspective. So yeah, I will continue to look for opportunities. But there is a company which has created some niche. That niche is growing very fast, and as a result, they have the ability to deliver 20-25% kind of growth. That's what we would look for. When we think about the IT, because I don't think the valuations are low enough to just do a value play anymore.
You looked at some of the early semiconductor plays, be it Keynes Technologies, or even your tube investor is talking about it is housed under tubes. Of course, the origin company would be Crompton. Even your Tata Technologies, for that matter, the aero kind of not exactly plain vanilla tech, but new age tech in a way. Have you looked at these kind of names?
I think the problem is that when we look at them, the market is so excited about them that they pay, the kind of valuations that we can't justify. We have to have whatever is the growth opportunity reasonably reflected in the share price, and I think don't think is the case. So we are not really participating in some of this new age tech. I mean, we do participate in some digital consumer plays where we see very good growth for a foreseeable future and also reasonable valuations.
Yes, that is the part that the market has just priced in 5 year plus kind of story into it already. Which is the area of the market which is neglected right now, where some really good bargain hunting work can be done?
I don't know. That's a tough one because I think one by one, every sector has had a bit of a rally. I mean, I think you could go for some very cyclical situations like paper or some things like that where maybe there is a scope for some bargain hunting. I would say the fact that the stocks may have not performed for some time. But I don't think I can think of a very kind of a clear-cut space where you can do pure bargain hunting.
How is the earning visibility? You must be reviewing your portfolio often. out of you have very nice and kind of assorted mix of stocks, I'm assuming. How's the earning visibility looking across your portfolio going forward, and versus that, what kind of valuation is it trading at?
I mean, earnings. See, I think earning visibility, obviously, by and large, backed on our overall economic performance, and I think to the extent that we have continuation of robust economic growth, I think earning visibility, for the companies which are rightly positioned, will be quite good. And I think if I look at our portfolio overall, the P valuation, if I can think of, probably in the range of 20 or so. So not very expensive from that standpoint. So that's where we like to be positioned, where we find some value with respect to growth.
All right, thank you very much, Bhavin. We'll let you go on that one. Great chatting with you, like always. Let's